Hi guys, and welcome to Price Actionist, the key to smart money trading. So currently, right now, we'll be looking at NAS. You know the drill. We're looking at NAS. What we're expecting it to do today is the 11th of January 2023. Let's see what's gonna happen in the market. So if we have time, likewise, we'll be looking at the SPX 500 and US 30. So let's go. So we remember what we said in terms of this. Let's just look at our tree diagram. Um, Object tree. We have a rectangle. Let's see which one this. Okay, let's try getting that rectangle back. This is not the one. Oh god damn, we have a lot. So what we'll do is we'll just draw a new one, and then from the highlight what we're seeing in terms of price, right? Let's do this. Let's close all of that. So essentially, this is what we saw in terms of the market last week. This is what we saw, and we have pointed out last week that we were going to trade into this area, and right now we're trading into it. So let's just mark this, let's decrease this, and then just make this dark gray, and then let's label it our liquidity pause. So let's be specific. Weekly liquidity pause. Let's put this at the top. See visibility. Perfect. So that's where we at right now in the market. And ideally, I would have liked to see the market proceeding to the downside, right? But let's see what we are dealing with today, right? So in terms of this, we saw we had this high, we traded over that high, and then we rejected very quickly. This is a daily high, we rejected very quickly, and then we started moving all the way above, right? So as far as this is concerned, we can see there's a structural change moving to all the way above. This is where the structure changed, and then we see we have a bullish structural change. We saw that we're having a daily fair value gap here. Yesterday it just tipped in it, and then it started expanding to the upside. We do not have any necessary SMT, right? So we know already that the monthly we're going all the way down. We know that the weekly we're going all the way down. So now the daily is showing us something different. It's saying we're pushing all the way high, right? So if I were to analyze this properly, counting, let's say, from where the structure is broken, counting 8 candles going back. Let's do this. 8 bars going back. Those are the bars, and then now we projected counting 20 candles going back, right? So we'll be looking at a possibility of the market coming all the way back here, for which it makes sense because that will be a retracement to the monthly fair value gap. Let me just highlight it properly. My internet connection a bit slow. So this is the point that we're talking about. But essentially, we know after this trade, we were expecting to go lower. But I'm not looking for the market to go all the way up there. I'm not looking for the market to go all the way up there, right? Because of we have a sell model active in terms of a monthly, weekly, and our daily showing us something different, right? This might be just a way of trapping retail traders and trapping them into a wrong market, and this might just start rejecting, moving lower. Tomorrow we're expecting the CPI to be active, so we'll see what happens. And then when we drop to the lower time frame, 1 hour, there's a lot happening here. So essentially what we saw is that there's SMT in terms of that. SMT pushing price all the way above, showing that there's sponsorship for price to go above. And then we saw that we had a structural change in terms of both 1 hour and 4 hours. So we expected price to essentially go all the way up and closing off these targets here. So now we closed off that target. We had a logical level, right? And then now we expected yesterday, we saw that price declined. We expected that to happen and then go all the way above again, right? So one thing that we can do for ourselves currently is check if we don't have SMT from above. So checking from this side, we can see clearly that there's no SMT as yet. Let's see. Okay, let's see in terms of that. So there's no visible SMT in terms of price. So we're still working on the basis of what we had all along. But when we look at this in terms of a smaller time frame, we have an idea that this might be a whole profile that has to be completed, right? So I'll be looking at this high as a high that we would like to get to. Let's do this. Let's see. This was a high the 9th. Let's do this. So to avoid confusion, I'm just gonna let's just remove it entirely. That's the liquidity pause from a weekly perspective. So let's do this in terms of text. Let's say a this is where liquidity is literally found in terms of the previous day high. Let's put a solid line so that we remember what that is. And then as far as the market is concerned into this, I'm looking at a trade all the way to closing this off. And then possibly after closing that off, that's when we'll be looking at a possibility of a decline. So I'm looking at this, taking this off, and then a possibility of a decline. So the reason why, okay, let's look at this high as well. Let's put this high as well. There's a huge possibility of getting to that high before the decline. Let's do this. One of the two will happen in the market today. So the market will clearly show us which one is which, right? And then I'll be looking at it coming all the way into these areas, going all the way down into those areas. So it'll show us what we're looking for precisely. So now let's drop to 15 minutes and break down price in terms of 15 minutes. So with 15 minutes, we can clearly see that there's a whole buy model that is happening. This is where price got, if we taking it from a very low point, this is where price changed its structure. Let's say 15 minutes structure, positive structure, right? 15 minute positive structure, put it at the bottom, make it visible only here. Just make this red, right? And this is where it changed, and then we went all the way above. We took this, we traded into that, we declined again, we came back to this fair value, we continued moving high, we took this high, took that up. So we played around, traded here, took that high. We have this fair value gap happening, so clearly we'll be looking at trading from this fair value gap. So we'll be looking at possibly doing what filling after trading into these areas. Let's do this. Trading into these areas, we're looking at filling price all the way up there. So before that, let's look at our session liquidity. From 2 a.m. to 7 a.m. There we go. See it turns. On the session. So essentially the expectation is we're expecting it to at least drop a bit and then go all the way inside. Let's see. That is the standard rule of thumb. Let's do this. Some shading in it. Right. So let's see Asian session. Visibility. That is good. And then let's just copy this. And then this is from 9 a.m. South African time to 12 p.m. South African time. So as you can see, this is it all the way to this high. So now what we're seeing is that there's no break in either the high or the low for this session. And then the session was filling out price in terms of this. I'm sorry for the banging and everything. But yeah, this is it, the high. And then we just took that out. So there's still this fair value to fill, all of this fair value to fill. And where we're trading, I'm very confident that the market has to continue going higher, right? So now let's delineate a price from, we'll be looking at delineating it from 3 South African time as well. We'll be looking at the possibility of what we call the liquidity traps, where the liquidity traps will be lying. And then we can also look at SMT currently in terms of the 15 minutes. Let's look at SMT. What is happening in terms of that? This is what we call index SMT. Okay. So currently there's none. So being confident about the trade, I'll start placing my buys right now, taking the market all the way above, right? Like I have stated already. So now I'm looking at this here, pushing either here or from this point on here, and then going all the way back down. Right, so this is where my take profits will be. Let's look at price from this instance. Okay. There's no SMT as well. So, but this is all good. I love what I'm seeing. And then I see a possible continuation. Let's drop lower. So, okay. So when price goes deep into this, we're trading. We could have started trading here, but because of it missed us, I'm just waiting for a retracement inside. Upon getting that retracement, I'm taking the trade going higher. So essentially, let me do this. A long position. It doesn't have to be a deep retracement, but based on your risk, then you have to identify what you're looking at. So the standard rule of thumb is at least take 1:3 trades. That's the standard rule of thumb. So the way it is, I don't like this. So essentially I would try getting it from probably D. Let's just put it here. If I can get it straight from D and then pushing all the way above. So right now I'm getting a 2.29 ratio. So aiming for that will give me the 3, right? It will give me way above 3. So I'll be looking at these, but at this point, we have to be offloading our trades. We have to be offloading our trades at this point. So yeah, this is what I'm looking at, ladies and gentlemen. I hope it becomes successful, and also that you have a good trading day. We'll come back with the updates. We'll come back with the market reviews. Thank you.